Coming up on Arirang News, schools in the greater Seoul area will open back up next week, though at limited capacity. Those measures will be in place well into October after the Chuseok holiday is over. New U.S. sanctions are due to take effect in the coming hours against the Chinese tech giant Huawei, banning companies from selling them any semiconductor components that use American technology. And the latest forecast from the Asian Development Bank has the South Korean economy shrinking this year by 1%. That projection is the same as it was 3 months ago. It's 5 p.m. here in Seoul. Thank you for tuning in to Arirang News. I'm Devin Whiting. Schools in the South Korean capital region, that is Seoul, Incheon, and Gyeonggi-do province, will be resuming classes in person next Monday. But they'll have to do so at a limited capacity under guidelines for the upcoming Chuseok holiday. For kindergarten through middle school, classes can be held at 1/3 capacity. For high schools, it's 2/3. This applies from September 21st until October 11th. Also, special education schools, schools with fewer than 60 students, and those in rural areas will be allowed to hold classes in person at their own discretion. The South Korean government has laid out plans to secure enough COVID-19 vaccines as they become available for some 30 million people. Plans for the rest are in the works, but for now, that's 60% of the country's total population. This first batch will be secured through a WHO program and from global biotech firms, and the rest from domestic Korean firms. Choi Jung-yoon has the details.
South Korea aims to secure COVID-19 vaccines for 30 million people, 60% of the total population. Prime Minister Chung Se-kyun at the cabinet meeting on Tuesday said the government is working on 2 tracks to secure the supply, purchasing vaccines produced outside the country while supporting domestic research.
We want to secure enough vaccines for everyone, but there's limitation on investment as the safety and efficacy of the vaccine and also the success and failure of it are all very uncertain.
60%, the initial target of inoculation, is based on the minimum rate of herd immunity that needs to be created, enough to reduce public fear over the pandemic. For the first batch, the government will acquire vaccines for 10 million people from COVAX facility, a global vaccine alliance under the World Health Organization, and 20 million more from private firms overseas. A further 20 million for the rest of the population will be supplied through local pharmaceutical companies based on the demand and progress made. To get the vaccine from the COVAX facility, Seoul will turn in the legal documents of confirmation by Friday. An upfront payment of $146 million will be made by October 9th to join the facility and secure shipments from overseas pharmaceutical firms such as AstraZeneca, Novavax, Pfizer, Moderna, and Johnson & Johnson. As the types of vaccines vary, deals will be made separately, based on the vaccine's safety, effectiveness, price, and when they can be made available for use. For Phase 2, the government will extensively support local firms to facilitate developments. Currently, local biotech company SK Bioscience has been working with foreign manufacturers to produce vaccines that will help meet local needs. Choi Jung-yoon, Arirang News.
In other news, the U.S. State Department says it will positively consider establishing a new two-way dialogue channel with South Korea. The department told Yonhap News Agency on Monday that Deputy Secretary of State Stephen Biegun thought the channel was a good idea after it was suggested last week by Seoul's Vice Foreign Minister Choi Jong-gun, who was visiting him in Washington. Choi announced the launch of the director-level consultative body, the so-called Alliance Dialogue, after those talks. Some raised doubts, though, about that announcement because it was not included in the State Department's readout the next day. Choi says the channel will be launched in October. The latest U.S. sanctions on the Chinese tech giant Huawei are due to take effect in the coming hours, which will cut the firm off from practically all of its semiconductor suppliers around the world. In the short term, that means some pain for South Korean chip makers, but they could benefit in the long run. Kim Sung-min has the details.
Starting from Tuesday, Chinese tech giant Huawei will no longer be able to buy semiconductor parts from major global firms. This comes as the sanctions put on Huawei by the U.S. Commerce Department last month comes into effect from September 15th. Under those sanctions, non-U.S. companies are restricted from selling Huawei any semiconductor parts developed with U.S. technology. Global chip makers will need advance approval from the Commerce Department if they wish to do business with the Chinese firm. This seems almost impossible given Washington's tough approach toward Beijing. The sanctions could have an immense impact on Huawei, making it hard for the firm to acquire the parts needed for all kinds of its products, from smartphones and TVs to mobile communication base stations. U.S. firms had already been banned from directly selling to Huawei since May last year, causing it to lose major suppliers like Qualcomm. Huawei has stockpiled chips ahead of the latest sanctions, but industry watchers say the company might be unable to produce new products by next year. The sanctions could also reshape the global smartphone and semiconductor industries. South Korea's largest chip makers like Samsung and SK Hynix are expected to take a direct hit in the short term, considering some $11 billion of South Korean semiconductor sales came solely from Huawei last year. In the long term, however, these two companies could rather benefit by taking over some of Huawei's share of the global smartphone industry. They are also expected to see increased sales to other Chinese buyers like Xiaomi. Kim Sung-min, Arirang News.
The latest outlook from the Asian Development Bank projects the South Korean economy to shrink this year by 1%. That's the same as its most recent forecast in June, despite the continuing pandemic. As for next year, the ADB expects Korea to recover and grow by 3.3%. For the Asian region as a whole, the ADB has lowered its projection from growth of 0.1% to -0.7%. Of the ADB member states, the biggest decline is forecast in India, where the pandemic's been the most severe, at -9%. Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, as always, thank you for making time today.
Thank you for having me always.
Well, stocks on Wall Street strongly higher on Monday with a bunch of M&A news and growing hope for a coronavirus vaccine. What's the story in the global markets?
Yes, as you said, U.S. market did quite strong move last night. If you look at the Dow Jones, it was up 1.2%. S&P was up 1.3%. The Nasdaq was up quite strongly by 1.9%. And small and mid-cap stocks, the Russell 2000 was up 2.7%. And volatility index also fell. Clearly, this was a good signal that the recovery for the equity market for U.S. was actually happening. The reason why such strong move occurred on Monday was because there were various signs of the M&A activities. If you look at the corporate side, NVIDIA announced that they'll be purchasing the chip maker of ARM's holding from SoftBank for $50 billion while the ByteDance chose Oracle to be TikTok's U.S. technology partners. And also Gilead said that it will acquire Immunomedics for $21 billion to expand its cancer treatment. All these news for the growth sectors M&A is actually benefiting the overall market movement. It seems that this kind of positive move is affecting the futures market as well tonight. The futures indexes for the S&P 500 as well as the Nasdaq is up about somewhere between 0.4 to 0.6%. Clearly, the news for the resumption of AstraZeneca's trial for the COVID-19 vaccine also lifted the sentiment in general. If you look at the Nasdaq and the growth sectors, it did suffer in the last 2 weeks, falling by as much as 10% from peak to bottom. But with the recovery that we saw yesterday, it seems that the sentiment is coming back. We hear that the inflow to Nasdaq ETFs were quite positive and quite strong. So overall, the direction of the equity market seems to be quite sustainable with upward momentum in the growth stocks in the future.
Seems like a similar story here in Korea. Stocks higher today, too. Lots going on there. The U.S. gains plus data from China and the easing of social distancing here. What's happening in the Korean markets?
Yes. Kospi actually was very strong at the beginning, but slightly lost some steam. But nevertheless, it ended close with a 0.65% rising today. Overall, there's a lot of news coming up from the China side as well as the Korea side. If you look at China data, the retail trade unexpectedly grew by 0.5% year on year in August, compared with the market consensus of flat number or declining numbers. So clearly, the Chinese market and Chinese economy seems to be recovering quite smoothly. China's industrial production also showed 5.6% year-on-year growth rate on August, accelerating from the 4.8% growth a month earlier. Clearly, these indications are saying that the boosting measure by China is actually affecting positively for economic growth rate, as well as the domestic consumption in China. Obviously, Korea does benefit from these positive numbers coming from China, that the Korea's export numbers should be improving in the future. Also, the local investors are cheering up for the possibility of the COVID-19 induced restrictions to be removed in the future. That might have positive indications for the domestic consumption in Korea as well. All this is benefiting overall that the Korean equity market is actually reaching the 4 weeks highs, 1,400 points were kind of on the top side, but it has broken above 1,436 points today. So clearly, overall, the sentiment seems to be in a positive direction with the U.S. market moving higher. We think that this kind of sentiment can continue for further in the future.
Now, about the U.S. sanctions coming into effect on Huawei, that's as of September 15th, so tonight in Korea. What effect will that have on local chip makers and stocks?
Right. Starting September 15th, China's telecom giant Huawei, it is the symbol of the 5G power in China. Starting September 15 will be cut off from the essential supplies of semiconductors. Now, this will have some negative implication in terms of the smartphone makers of Huawei, also the 5G equipment side as well. Now, if these things happen, then it might be negative for Samsung Electronics or SK Hynix in the short term, because if you look at the sales number in terms of semiconductor shipment and semiconductor sales, Huawei is a big part of the sales. For Samsung, it's about 10%, about 9% of the semiconductor sales, and also for the SK Hynix, it's over 10% of the sales. So if this kind of restriction happens, then it's definitely negative news in the short term. However, if you look into the longer term basis, it is positive news for the Korean makers, because competition will be less, and also the market share wise, in a longer term basis, Korea will continue to increase its market share in terms of semiconductor business. Also, for the semiconductor equipment or the foundry business, also Korea can gain its market share in the future. So overall, we think that is positive news for Korea in a longer term, but maybe in the short term, it might cause some volatility because of the losses in sales for the Huawei as the buyer of demand side. Overall, I think that IT sectors, there's a lot of the changes are happening, but all in all, we think that this is a positive news at this point in time, where the technology sector is going through a lot of M&As, a lot of the changes, and eventually the overall demand will pick up quite significantly over the next 1 to 2 years. So if that's the case, then we should be looking at positively on IT-focused countries such as Taiwan and Korea.
Got it. All right, Mr. Yu, thanks so much for sharing your insights today. We appreciate it.
Thank you very much.
South Korea has designated another 5 regions of the country as special disaster zones to help them recover from the 2 typhoons that hit in the past several weeks. These regions are Samcheok City and Yangyang County in Gangwon-do Province, and the counties of Yeongdeok, Uljin, Ullung in Gyeongsang-buk-do Province. Here's the announcement from the Blue House.
President Moon Jae-in had ordered swift restoration efforts and a quick assessment of the damage so that the disaster designations could be completed before the Chuseok holiday for the worst affected regions. With the designations, we are hoping for effective restoration in the affected areas.
These areas will be eligible for state-funded restoration work, while affected residents will be able to receive financial support for their living expenses. The top office said that further designations will be announced after on-site inspections and assessments of other areas. The South Korean budget airline T-Way is going to resume flights from South Korea to the Chinese city of Wuhan starting this Wednesday. These will be the first regular flights from Incheon to Wuhan in 8 months, and it'll be scheduled once a week. This will be the 10th route to China to reopen. South Korean Airlines suspended flights to Wuhan on January 23rd, the same day the city was locked down. A U.S. nonprofit organization has ranked South Korea as the 17th best country to live in. This is based on a survey of 163 countries by the group Social Progress Imperative. At number 17, South Korea is up 6 spots from last year. Top of the list is Norway for the 3rd year in a row, followed by Denmark and Finland. Japan ranked 13th, while China ranked 100th. The index measures 3 categories: basic human needs like healthcare, as well as access to information and access to opportunities such as higher education. And that brings us to the end of this newscast. Thank you for watching. More live news coming your way at 7 p.m. Korea time.